you have some questions
Uh,
around. You
yeah,
have
we just
questions on
moved.
how to think about trade overlapping adjacent CVA and previous David area and dissonance market dynamic rules. See the
Yeah,
price
so
points in
yeah,
January. Just a second to open these charts in a browser to see the bigger pictures. Yeah, the dissonance is always tricky. I mean, it's not always, but depends. Uh, is this your questions or you have some other questions as
well,
well?
yeah, we'll go with this question. This say here. So
Yeah,
if you look at the market profile picture on the
uh,
right,
yeah, okay.
you'll see there are three adjacent and overlapping CDAs. So price on the
Uh, just a
you
second,
see?
just a second for me to analyze this. This thing might do view as one big balance area of three separate balance areas. No. First, no. I'm watching this as three separate balance areas, but this areas in between balances, I'm watching like of course like edge. But if we're coming from lower balance to the up balance, then from the perspective of lower balance, this is breakout, and from perspective of the higher balance, higher in price, upper balance, it's like return pullback setup, and but look, this part is pretty tricky because it shows it's tricky with time. This balance is from the July of the last year, and it should be weak, but I don't see it as a weak. Look, this value area low stop of this profile stop right at the value area low of the CVA. Value area high is pretty close to this CVA low, so it have
Yeah.
some impact, but we run through this all three balance few times and it's still working, so there is something here that have
Okay. So price, I mean, price went up and through the balance areas, and that's where that
yes,
orange circle is. So there was
yes.
price accepting above the balance area on that day, and then price.
No, no,
Well,
this is not accepting.
which isn't
The
accepting.
No,
The
this is not look these two legs down on these two profiles. We come back inside. Oh no, sorry. Above. What the fuck is this? Ah, this is New Balance here.
That's new balance
Yeah,
area that
yeah,
doesn't that.
yeah.
That's the balance area relevant.
Yeah, you have to cut the old one before the new one. So it's not.
I did, but the new one doesn't come into effect until after this day is finished. So the
Uh,
old one was the one that was relevant for this day.
yeah. Okay.
That's
Okay.
why I put a green line across so you could see it. Yeah.
Yeah. Okay. So this price here it's not accepted here because we look how big is this moves down. So we actually have more volume under the level than over the level.
Okay, but
If you're
if you
watching a TPO charts, and is this here is this is the same as here, this and
well,
this.
part of it, yes, and to the left, there's see that little green line just below the red circle. That's the top of the value area, the composite value area that was alive. So
This
if I
one,
was looking at that, yeah, yeah. So
yeah,
that's the top of the value area.
yeah.
So not the other grey line. So I would have
Hmm.
thought that was accepting, and then it came back in and failed, came back in. and then it went back above. I
Mhm.
wasn't sure whether that was accepting or not.
Here,
Yeah.
yeah, sure, it looks like accepting, here.
Okay.
But
So
it looks like
yeah,
accepting, and it looks like so far, and this move looks like bull flag. So
yeah,
you can expect the move up, but then you have some problem with this setup. It's too late in the day. Look down.
yeah,
It's 14.
yeah,
This is, I guess, Chicago time. So it's afternoon in
yeah,
Chicago, and it's too late in the day to lean on this price action. Uh,
yeah,
as we come from here to here. So this is the same thing actually.
yeah,
This is day before B profile, some sort of B profile. I was expecting, frankly, this day I was expecting we will keep going down, but we didn't, and then we rip up. So it was essentially accumulation, and we rip up, and this was selling here, like distribution. And at this time of the day, you can expect it will probably start to traders, short-term traders, to taking profit. So it will put the pressure down on the market in like selling pressure in the market because they were long from here to here. So when they put selling pressure, and it's happened actually, you can see it is sell off, and then when they finish to taking profit, they just come back here and hover close to the upper part of this old CVA here, But
yeah.
this tricky. What date was this? This is 12.
The
12.
12th and then 13th was when it ripped up.
Yeah, this is Thursday and Friday, 12 and 14, the week. Yeah. So this is something that is, well, a bit tricky to read, and when we come back into the sure, look, sure, it looks here by the rules of market dynamics and all these things, you should go long here, and this will be like a good trade, Why? We broke above, then we print some bull flag, and like touch the value area as composite value area high, and at this moment it was also the DVA high in this area. So
Yeah.
long was like a proper trade here, but you must remember, that there is no 100% short trades in the market, so it's
No, that's fine. That's fine.
you know.
So, but yeah. So my main question then,
Mhm.
because we're now at the top of these, CVAs, these,
Yeah.
so we've accepted above, but we've rejected that. We've come back in and accepted below inside the CVA.
Inside
So
DVA,
then,
yeah, CVA and DVA. Okay, yeah.
yeah,
Mhm.
so we've accepted inside. So as I understand, market dynamics say that we're going, we should expect to, basically pass
Traverse,
through,
traverse to
traverse
the other
down.
side. Yeah, yeah,
But,
yeah,
so we get a down day, and that's what's happening. So, throughout ETH, price comes all the way down, and
yeah.
it comes down to to that value area high low of those two value areas.
Yes.
Yeah, and then it stops,
Mm-hmm.
and then it goes back up. Now, when we had the lesson last week,
Yes.
you talked about price going back because we were looking at developing value area on that day,
Yeah.
and you talked about price going up, hitting hitting the top of the value area, the developing value area,
Yes.
where that orange circle is, or ellipse is,
Mm-hmm.
accepting outside of the value area, then having a bull flag and an imbalance pullback effectively,
Yeah, here
and
and then go up.
then a trade here. So my question is, if I'm trading by the rules of market dynamics that say, we've accepted at the top of our value, we've got to let it go all the way to the bottom.
Yeah.
Why do I have a trade to go back up to the top of the value area
You
before
mean
onto the
here?
bottom?
You mean
Why is
here?
that a trade? Because it's
Look,
not
yeah, it is trade because you forget about one rules of market dynamic exception rules rule.
oh, yeah,
When we are accepted inside the value area, the price have tendency to traverse to the other side, and then you have only exception of this traverse to the other side of the value area is rejection from the point of control. Now, in this picture here, what we have? We have essentially acceptance. So this is what second? You have previous day here on the charts. We are not using these previous days like on CVA, So okay,
okay,
but essentially this is value area low here on this. This is double trouble. So this is actually 398,425 or something like this,
that is value area low.
Yeah.
Yeah.
We come from below. We hit the 1.5 and then chop here and then come back down and look where we come. We come to this this low. So this is acceptance picture. So this is return pullback or in this value area here.
So that was
this left to this left.
Okay, that's great. So that
I mean this CVA here,
Yeah.
And remember just a second. Remember when I teach you about DVA, we are not using DVAs as a reference lines, but as a guidance where we are going. At that moment when we rip in, so we have some, let's say 50% move of this impulse inside this upper CVA. We come back, retest the area where we have change in market conditions. So between these two CVAs, this is change in market condition here. It doesn't matter, it's balance here, but it's change because it's different balance zones. We come retest, we come to the VWAP, and VWAP is in the same area as this retest here, and VWAP is going up, So this is one more thing. Sure, it can break, So yeah, fuck it, you take trade and you are stopped and the trade idea is invalidated. But what you have like confluence of some things here. First you have return pullback or breakout pullback to the area, and in this area you have VWAP, and this complete DVA at that moment is actually value is migrating up. So slope of the VWAP is up, and this was proper setup for taking. It gives you like proper setup for taking this long here, and yeah, that's it. I don't see. You have to rank and distill. So CVA is stronger, bigger, more important level than DVA, or also it is more important level than previous day value area. Because it's 2 or 3 or 4 days. This CVA. I don't know. This is 2 day of the composite. but 2 days
Okay.
is stronger than 1 day. So you have
Yeah.
duration. Duration is longer than a 1 day, and of course you need to watch. You need to watch. Sorry um, for the recency. So this one is like it. Okay, it was from the, I think, December 22 or something. This one that was actual here. So
Was, yeah,
December.
December 22, yeah.
Yeah,
12th is,
December. Yeah, it's not so far away like a lower one, like July 22, but December 22 at that moment is pretty fresh.
yeah.
And so you have fresh, you have stronger than previous day, and where is previous day actually levels here. You don't have previous day value area high, value area low
I would have done at the time, but I probably updated it, so I didn't
Yeah,
redraw them. Yeah,
yeah, okay.
but you can
Uh,
see it on. You can see it there actually on the TPO on the right. You can see the line across, which is just above. It looks like it's about 186 or something like that. So just above there. So if you go to the
186.
TPOs, yeah, you can see it. You can see it just underneath the red line on the middle
Oh
TPO.
yeah, this one. Yeah, 186,
Yeah.
something like
So it's
this.
pretty close to the. It's pretty close to where the bottom of that
186.
pullback.
Yeah. So you have actually confluence in this in
Yeah.
this area. You have confluence of previous day value area low. You have confluence of composite value area low. You have confluence of the VWAP, and VWAP is actually POC, point of control of this DVA. So you
Yeah.
have exception rules of exception of traversing,
Yeah.
and you have pretty strong support in this previous day and composite value area here,
Yeah.
and you have slope of the DVAs up. So actually value is migrating up, and so this is excellent long entry in this area. Of course, now we come execution and rhythm and all these things. It can stop you, or you can use like bigger stops. But then you look, if you're using bigger stops, you will have more win percentage, but you are hurting your risk reward. Okay.
Yeah.
If you're using smaller stops, you are hurting your win percentage because you will be stopped more often, and on the other side, you will have a much bigger risk reward. So it's always, there is no free lunch in trading, and also there is always a trade-off between two things, or two good things or two
Yeah.
bad things. But
Yeah.
this level here was pretty strong,
Yeah.
a pretty strong story, and strong trading idea for going long, because it's just have confluence on the levels of two previous
Okay.
established levels, and you have like daily trend is up. Only what I see here as a potential questionable thing is that, but we still didn't learn this, so you have to ignore the delta come to the negative territory here. But so this is like suspicious to me, you know. But yeah, it is. But remember the things when delta doesn't cooperate too much, for the future lesson. The context is the king in the market. Always, context is the king.
Okay. So the main question I had, which you've answered, is
Mhm.
the three balance zones, the three CVAs. You look
Yes.
at those separately. So I can see as you go over 183894,
Yeah,
3984, that
yeah,
is into a new balance zone. So you're looking at acceptance in that balance zone and you've got it. Therefore, that is
exactly.
a return pull. That's a return pullback. If I
Yeah.
was treating it as one balance zone, I hadn't left the balance zone. So that was my query. But I understand. That's great. Got it.
What this one here?
Yeah. So if instead of it being
Yeah,
three separate balance, that you
yeah.
see, there's
Look,
no trade there as far as I can tell because I've not left the balance zone.
so far, yeah, but here you will have trade after today lesson. There
Yeah.
is a reason
That's yeah.
why we didn't left out,
Yeah.
and when actually this was straight. When you see that that like we going up, and then this is bull flag, and you actually
Yeah.
see from this price action that that this imbalance down is failing, is falling apart,
Yeah.
failing, and there was a reason. I think it was on the weekly chart why we hit this. This was a weekly level that we hit, and in this area somewhere, and we actually have confluence on the weekly and the CVA here, so it again it becomes stronger, the same as here, but on the move down like this, and you can, when you reading after today lesson, like longer term views, you can
Yeah.
prepare yourself for the eventually trend change, but we are never ever fighting imbalance on DVA. So we are not going long here, we are not going long here, we are not going long here. But again, you can go short here because you have enough the move to this confluence of the level on the higher time frame charts. So it is not to expect that these charts traders will step in at this level, but they can step in this level, and they actually done that, move price up, so buy the first set of contracts, and then just leave this move downs was sellers that was trying to sell, like, this was sellers who don't understand what is happening in the market, and they see the move down, they see the pullback, and they try to, like, sell the fucking top, or
Yeah.
buy the fucking dip. So this is sell the fucking top, and actually they become suckers in this move, And but these guys who are moving this market, these big traders, they are not, trading like idiots. They will not move the price here for these guys to buy, to take the profit. They will just chop here, like, in this, small range, going down, and then they will push the price up, and actually trap the shorts here. These shorts who were shorting here become the prey, and they trap it and move the price up, and then we hit. I mean, this is the tools that show us where is the value. We are trading the value, and we are following what the value is doing. Value,
Yeah.
value area or value, and
Okay.
so that's why you have these edges of the value. So this is the edges of the fair price. Is this DVA is the fair price for the day, inside the day, but it's changing
Yeah.
through the day. So we are not leaning on this. We are leaning on established value areas, and we are using like extreme fade and imbalance pullback to get into the position at the proper, to have the tools to get into position in the proper place, to know how to play this. And so this here was actually excellent entry. This was the best entry in a day, I think,
Yeah.
yeah, the RTH just opened. We just make this bull flag, and if you know where we are in the context, in a bigger picture, when it start to go up, like have problems to get out of the value of DVA, when it start to go up, yeah, you could be stopped here. If you go long here, if you go long here, you could be stopped like two stops. Okay, first try will work, because your stop will seal here. Down here it will not hit your stop, will work, and you will actually be able, if you understand what is happening and you see, this confluence here, you have confluence here, you have exception of the rule that will traverse down, and you know so this
Yeah.
is this is monster trade that you can catch here. And actually, when you are in this trade from here, going here, you can size out here. When you see that it's happening, you can size out a bit here, but keep your core position. And when it come here, and when you see that it will hold and go up, then you can size in and go with even bigger position, like 1.5. If you are going with two contracts, you can size out one contract here, so you still have one contract. And then you size in again with two contracts, and you can go actually on this move, you can go with the three contracts, and you
Yeah.
size out again at some a logical target. I don't know, it was this CVA high or this at the moment, because it's not clear on your picture right now.
Yeah.
But I think this was the CVA here.
Yeah. It was.
And
Yeah. That's right.
yeah, yeah. And when you see we come here, and you are thinking about sizing out, and you see what price is doing, like acceptance picture again, you know,
Yeah.
yeah, I will try not to size out here, because this is acceptance picture, like time acceptance is here,
Yeah.
and then we rip for the last move up, you know. And this price here, this day here was pretty nice, pretty nice. What I didn't expect, what I frankly didn't expect, is this move down. This moves surprised me in the morning. I didn't expect it. But when we come here after that, it was pretty clear move, and this actually is much bigger move. You have first entry, second entry, third entry, so you can actually adding to the winning position all the time to ride it up. And this is like 15. Yeah, this is the end of the day. So your when we come here, you have to watch, maybe size out. No, this wasn't line at that moment. This was the value area high. So when we come up, you can size in this area. You can close your trade in this area, because it was time of the day. We are very close to the closing of the market on close. So so you can expect the profit taking and all things from the traders who ride this move up. And you can close your trade here. So this is pretty nice move from, like, what was this, 70, 71 to 4,020 something, 24, 23. So it's, yeah, 50 or
Yeah.
some points up, and you can actually add to the winning position twice, here and
Yeah.
here. So this is how I read this thing. And
Yeah.
you have confluences. Confluences is easy to trade. The point is that when you have dissonance, this is tricky. And after today lesson, you will have like 46 or some levels to monitor, and um, it will give you a lot more complicated. Uh, it will complicate your life a lot more. because there is, with that much levels, you always have some confluence or some dissonance, and you have to think truly, through this to find out what is important and what is not important. But
Okay.
when you get
Okay.
this reading properly, you have even stronger uh, um, stronger thesis, stronger read on the market. And so this is CVI imbalance from this CVA previous day balance. Yeah, okay. And you have imbalance to CVA value area low, CVA. So for this picture, you write it, you draw it, okay, but what is exactly? I just need confirmation. You need.
Well, it's more. Let's say price is at the at the top CVA, and it's really just price moves from one CVA into the area of dissonance.
Yes.
And then there's an area of imbalance. Let's say, for example, we're in that area of dissonance.
Yes.
And we go above. Well, we're in imbalance. That's easy enough.
You mean this dissonance?
Yeah, I mean, do you just ignore price then? Is it just too hard to trade a little bit because it's just too conflicting?
Yeah.
Or do you, because in theory, price should move from the PD value area low to the PD value area high, but once it gets over the composite value area high, it's sort of in the dissonance area. So do you then sort of say, oh, I don't know what's going to happen?
Yeah. Look here. We again now. This depends. As you draw this here, you have pretty hard thing to trade because the range is small, 8 points.
Yeah.
Here.
Yeah, which is
8 point. This is something that is, let's say, not worth the risk.
Yeah. Okay.
Yeah, CVA high. It's a bigger level than previous day value area high, but CVA high is recent level, and this is older level. So you again you have to make like a ranking of this level and the stealing. But the point to enter here, we have big chop here, and I guess it was, if you copy this from the real market, you will have chop in this area because the point of control is somewhere here. Okay, and we have in the middle third of the value area, we have the biggest chop. So to get over this CVA high, you will have choppy price action. What I will wait rather is to get into the this area. So when we break previous day value area low, watch the price here, maybe size out a bit for the to be sure not to lose money, and wait when we break above the previous day value area high. We theoretically should break this because the CVA, if like this was two CVAs and then this market profile, just one single one, then this market profile is like okay, we are going to the higher here, but have some some suckers is selling here, and nobody, of course, the big players will buy in this area. They will not push price up as long as they have some suckers who will sell to them, like shorter. Why? Because when they short here, what they become? They become buyers, you know. And if we break previous day value area high, these buyers become seller, not shorter, sorry. These sellers become buyers here because they start to puke out because they are losing money. They start to get out and actually buying and hitting more buying pressure on the upside. And it could happen that we will just run into this CVA upper and and go again by the rules of market dynamics up, you know. So the if I'm like big player, I will hold the market here as long as I have the sellers here. They think that this is maybe pullback, you know, so the price will go down. I will hold the market here, and then when the sellers is like I lost the sellers, there is no more sellers, no more down sell pressure. I will push the market higher and then trap them and actually force them to buy and help me to move even higher, you know, market
Okay.
to sell my accumulation here. But
Yeah.
again, this greatly depends on the context of the
Yeah.
higher time frames, you know, and
Yeah.
if this is, for instance, if this down here is like it's like we come here and bounce, and if here is like on the monthly charts, second standard deviation in this area, this is short-term bearish. So this could be this could in that moment we will learn this today. We break over the second deviation, come to the second deviation, bounce a bit from the second deviation, and then you can watch on the monthly. You can watch how the weekly is acting. On the weekly, if we bounce over the second deviation on monthly, on the weekly we are probably even higher uh, than 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 that, or maybe this was a second deviation on monthly is here. Maybe we hit the second deviation on the weekly here, come to the weekly first deviation, so DVA, that is in confluence with the second deviation, come to the on next day, come to the first 1.5 on the weekly, and then I will wait to see because the monthly is generally bullish, but short-term bearish, you know,
Yeah.
and the weekly is actually we have imbalance down, we have pull imbalance pull back, you know, but we need to see because we are too high, we are extended on the monthly. We need to see will this imbalance pull back hold or get over 1.5. If it cannot get over 1.5, then previous day value area low is actually when we break below. This is good short because you can expect then that on the monthly we will hit at least 0.5, if not first deviation on the move down. You know, so it's you need to combine the picture of these time frames to get the better reading on the market. You know, there is no way, and you will need to practice this. You know, because it's just
Yeah.
okay. We will go through the lesson today because with these things, you know, but
Yeah.
generally, as I explained, if you're watching just this, if we accept over the CVA high, yeah, we are expecting to go into the upper balance zone, you know, but we have this. Maybe we can chop around this previous day area high and then go up, you know, or maybe even maybe you will have picture like today we will open breakout, and this breakout top will be previous day very high, then we will retrace back to the composite value area high, like breakout pullback, and then when we start to go up, we will just run through the previous day high. Okay, it could happen.
Yeah.
And just maybe put some small book like here and keep going up,